Ready to start investing? Great! But before you do, let's cover 3 traps that sink most beginners. Avoiding these will put you on the right path, so let's dive in. Mistake number 1. Putting all your eggs in one basket. It's tempting to go all in on a hot stock tip, but that's risky. If that one investment fails, you lose everything. The fix is diversification, a fancy word for spreading your money out. Instead of buying just one company's stock, you can buy an exchange-traded fund, or ETF. An ETF gives you a small piece of hundreds of companies, so if one company has a bad year, it doesn't sink your whole portfolio. Mistake number 2, trying to time the market. This is the impossible dream of buying at the absolute bottom and selling at the very top. The reality is, no one can do this consistently. Most who try just end up buying high due to hype and selling low out of panic. The solution is to focus on time in the market, not timing the market. A simple way to do this is with dollar cost averaging, investing a set amount of money on a regular schedule. You just keep investing, whether the market is up or down. This removes the stress of trying to predict the future. Mistake number 3, letting your emotions drive your decisions. When the market soars, FOMO makes you want to buy anything. When it falls, panic makes you want to sell everything. This is a recipe for buying high and selling low. Your investment plan is your map. Don't let fear or greed grab the steering wheel. Investors who stick to their plan, even through market crashes, are the ones who succeed long-term. Base your strategy on your goals, not today's headlines. So, to recap, 1. Diversify your investments. 2. Focus on time in the market. And 3. Keep your emotions in check. Avoid these 3 mistakes and you'll be far ahead of the game. If this was helpful, subscribe for our and let us know in the comments. Which mistake have you been most tempted by? This is Growth Minded. Thanks for watching.